pull that we seen on GU on Thursday the 28th of December 2023. So this is a market maker sell model, and straight away we're on the monthly chart, and the first thing we can see on the monthly chart that sticks out to us really clearly is that we've broke structure down here, had a market structure shift, started to push back up. So what do we look for then? We look for areas of internal range liquidity, fair value gaps, liquidity voids, so anything like that, inversion fair value gaps, whatever you might want to look for that you're looking to bounce from. So we can see a nice clear one here is this monthly fair value gap. We have a little one above, but we can see price has previously bounced off this area as well. So zooming into price a little bit now, because we've got our area that we're looking for. This was nice and easy to spot straight away. It was clear. Once you see something that's clear, you should be trading that chart. If you can't see it clear within 1 or 2 minutes of looking at the monthly or the daily, when you're getting your main drawn liquidity, you probably want to trade a different chart or look at a different chart for something that jumps out at you more clearly. So anyways, monthly, we can see we've tapped back into this monthly fair value gap again after we pushed down. We didn't sweep any liquidity after we tapped into this last time, so we've now created low resistance liquidity down here. We got this swing point and this swing point on the monthly. So my ideal situation is that we now respect this monthly fair value gap and push to the downside. So with that in mind, I'm now going to go down to the daily chart and look at the daily and see if we can form any sort of trade based on my bearish monthly bias. So we're going from monthly to the daily, daily to 1 hour for structure, and then once we go from the 1 hour and we see a structure shift, we will then jump onto the 5 minute for a market structure shift and an entry. Let's jump to the 1 day chart now, and as you can see, we're well within the monthly fair value gap. I'm going to just move this here just to make it nice and clear. Just don't need to have it blurring up the chart. So we can see we're obviously in bullish order flow. Price is respecting bullish FVGs and pushing higher. But what do we see? We're coming into this monthly fair value gap level. We swept at a market structure shift here, which we can see, and we respected the bullish order flow, continued higher, respected this fair value gap, pushed higher. So going from internal now, we was looking for this external range, and what do we see? We see price sweep this external range here. So now, with that in mind, we're looking for price to now come down and tap some sort of internal range liquidity. There's nothing clear has been created in this period of time. So for me, it would be looking to go back into this previous daily FVG that was respected to tap back into there again, and then from that we'll either push through and that'll be used as an inversion, or we'll bounce off it and push higher and completely disrespect the monthly fair value gap and push to the buy side. But for me right now, we know that from external to internal range you have a little bit more forgiveness if you push down towards the inversions or FVGs, which is your internal range. You know that price could just tap into this, so you can take trades towards this, and even if you're wrong, price is going to draw into some sort of internal range before it pushes to sweep the external again anyways. So with that in mind, we're coming into the day with a bearish bias, and to confirm this we need to drop down to the 1 hour chart and see what plays out. So the 1 hour chart, we can see, if we just turn this off for now, we can see that we have our daily FVG down here, and we have our market structure shift here. So what we're looking for? We're looking for now some sort of confirmation that we are going to break structure. So this would be our 1 hour area to break structure at this moment in time, and we'll draw that on for now. And this may change obviously when we're playing the trade out, due to obviously live conditions is what happens, and you're trading and you're watching the chart, so you'll be moving things and looking for areas to enter. So with this in mind, we're coming up towards London now, and we can go onto the 5 minute chart. You can see that we're just about to go into London, and at this point now we can put on our session liquidities, and we can see we did previously sweep the Asia level, but this is relative equal highs for me now. So in London, I'd like to see a push up to create the London high of the day, and then come back down to create a 1 hour market structure shift. We need to see now, going from the daily to the 1 hour, we need to see a 1 hour market structure break. We need to see the market break to the downside to show that we're changing state of delivery. We want to see price is now going bearish instead of staying in bullish order flow. So pushing price forward, start of London session, you can see we push up, create the London high of the day, and then we start to trade down. As you can see, at this point, we haven't got any areas to confirm anything yet. So these fair value gaps are being respected, but we've had no 5-minute breaker structure or anything yet. So there'll be no trades for me at this moment in time. You can see we have a market structure, 5-minute market structure shift area just here. Just pull that 1 hour one to there for now, because we're going to change the 1 hour one once we look out on the 1 hour chart. So anyways, so you can see we've just gone into the 3 a.m. silver bullet London session times, and we now create a 5-minute market structure shift. So at this point, we will jump out to the 1 hour and see how that's playing out. And what can we see? Well, we can actually see that the 5-minute market structure shift area is also our 1 hour market structure shift, because it's a low with a high either side of it, and it's the low that pushed price up to create the London high of the day. So now this is our 1 hour market structure shift area also. So going back with that knowledge on the 5-minute, we can see we have previous day's highs also been broken throughout the Asia session, and we're above midnight open if we now create a fair value gap, which we do. So now, looking at this will be my area of interest. For me, if we get an hourly close below the market structure shift area, which is here, if the hourly, which closes in 25 minutes, closes below this level, I will look for a retest into this 5-minute fair value gap for a push down to the sell side liquidity, which is resting below. So let's push price forward until that 4 o'clock time, which we have now confirmed we are in. So let's go back to the 1 hour, and as you can see, this is the candle. For some reason, TradingView always prints the next candle's hour for some reason, but you can see we did just close just below the market structure shift level on the 1 hour. So now going into the 4 a.m. candle in London session, in London kill zone, 2 a.m. to 5 a.m., we can now look to short off this area. We've had an Asia sweep, we've had this little relative equal high sweep, we've created the London high of the day, which we tend to see form the high or low of the day. And if we just pull out our power of 3, we can see that, what have we done? We've opened, we've created the high of the day, which is London, come back down. Now we want to be getting in around our 5-minute fair value gap area, and then push to create the low of the day. And we want to be on that leg all the way down until we create the low of the day, or until we sweep our area of liquidity that we're looking to target, or obviously you hit your 1 to 2 or whatever risk to reward that you're aiming for. So knowing this now, we will be looking to short off this 5-minute fair value gap. This is aligned exactly how you would expect it to align. We'll put our stops above the London high, because we would do that if we was going to trade live, just to be safe. And we can also now zoom out onto the 1 hour for our areas to target. So where would we be looking to target here? Well, we could target this external range, 1 hour external range, just down here on the 1 hour chart. You've also got this level of liquidity down here, which was the previous New York AM session. So we got them 2 levels there that we can target, and that would be where we would aim for our trade to run to. So you can see this first hourly level doesn't give us a 1 to 2, which is our minimum, but we can just go below because we still do have a draw down here. Also, we have loads of low resistance liquidity here. Again, here we have lows, here we have lows. So there is lots of potential to the downside. We also have our monthly and daily bias to show bearishness, which is what we're looking for shorts. So we're bearish, and that all aligns perfectly with how we've played the day out as well. So we've got open, high, low, close is the formation we're looking to take, which is the power of 3. And you can see as well, we got our midnight open here. We've accumulated, manipulated price up. Now price is making its move to the downside. We want to just get back up on the retest. So this would be our entry off this 5-minute level, and we want it to happen before 5 o'clock. So if we get in before 5, then we will let the trade play out, and if we don't, then we won't take an entry until the New York session. So boom, you see price taps into that 5-minute fair value gap 3 times, then pushes away. So we can move this here, because this was our 1 hour and our 5-minute market structure shift. And that aligned really nicely. So we're in the trade now. This would be our trade confirmed and into it. And coming to the end of London, but the trade's already running, so we're in and safe. We would now be targeting the London low during the New York session, unless obviously we take it out before that. So we are now out of the kill zone. We've now just swept the London low. At this point, we're now probably running, we're running about 1% up. For me, at this point, I would probably reduce risk to just above this high here. Probably just put it, let's say, pip above, so 4 pips, just above the fair value gap. And that wouldn't be my overall ratio, but that would be my trade now running for a 1 to 2 down to this level. But for the sake of the video, we will just put price back up here and move this to the side for now. So you can see we've still got a 1 to 2 trade to play out, but this would be, my stops would now be at this level, just above this fair value gap. I can also just put price. So we'll say we've reduced risk now by moving our stops. And obviously if we did come up above this 5-minute fair value gap now, we wouldn't be looking for sales anyway. So reducing the risk on the table is the best way to keep your capital. So we've got this 2% level down here. We might as well pull that out as well. Make it nice and clean and clear for us to see when we're looking back at this. So we got our 2% target, which is down here. So the trade played out exactly how you wanted to see it play out on any given day. This is a perfect market maker sell model. We've got the higher time frame on our side, and you can see price respects these fair value gaps perfectly when you know you've got the higher time frame. So we've got this external range to target still. And as you can see, price is not doing too much because obviously we're not in the New York session just yet. And we're now in the New York AM session, and you see price really aggressively push straight down to take that external range liquidity. It doesn't stop just at that external range liquidity, and the reason it doesn't do that is because, like I said, there's still external range liquidity resting down here. So although that's the first hourly external range target, we've got a higher time frame daily and monthly area to be targeting. So price is not going to just stop at the first time it hits anything. It's going to push aggressively through. This shows you're in line with order flow. So as you can see now, if we just pull that back, that was our trade. We'd have took it from anywhere from there. And you can see we entered that trade and took a 1 to 2 trade, nice and easy. And that trade ran for 2 hours and 45 minutes. Mainly because we had a little bit of just out of in between sessions there. But look, you can see we pushed off nice and aggressively down at the end of London, and then we pushed off really aggressively at the end of the start of New York. So it's nice and clear. It's very easy to see it. We can see exactly what we wanted to see, and it played out exactly how we wanted it to. Just going over it again, we had the monthly. Oh, let me just clear that up before we do that, because I don't want that to get confusing. Just put that on the current interval only, and this as well. So if we go back to the monthly, you can see, oh, they're still there for whatever reason. Oh well, let's just delete them. So you can see we have the monthly monthly fair value gap, and we want to see that respected. And we are looking for a bearish trade. We also know that we're in a premium area when we pull price down from here to here. You can see we're nicely in a premium, so we'll be looking for shorts anyways. That aligns perfectly. With that in mind, we drop down to the daily chart. We are looking for a nice sell-off. So we got tapped back into this monthly area. We swept this nice level here. So we knew we've swept external range. What's the next thing we do? We go from external to internal. So we'll be looking for internal. We know the internal draw is back down here where we previously respected, but we know it's there. Daily FVG. That's our daily draw. So now we know we swept external to internal, back down towards this daily fair value gap. And as you can see, our first external range was miles above that, and even our second one's still above. So we could be bearish all the way down here. You obviously have this area here, which is a little balanced price range. So watch to see how price reacts. Also, you have a bullish, well, an order block here. So you've got to see how price bounces. If it pushes through nicely, we'll probably target this internal range. But yeah, knowing that, we went down to the 1 hour. Obviously, price is played forward now, but at the time, like I said, we had the Asia level. We swept it, created London high of the day, open, high, low, close. So we got open, which is 5 o'clock just over here. We got the open, accumulation, manipulation, distribution, open, high, low, and then close. Same things. And with that in mind, we used our market maker sell model to get a entry within our kill zone times. And you can see how perfectly it played out. Our external range was smashed right through there. Our other target hasn't been touched yet, but we would close the trade at 2R anyways. 2% is more than enough. And yeah, that played out really, really nicely. We can just make this nice and clear if we take away. Let's just mark this up a little bit cleaner just to get one nice final view of it. So we have the Asia high swept. Let's create this here. High of the day, London high of the day. So we got the London high of the day here. We have the market structure shift here, which became the 1 hour and 5 minute one. So 1 hour, 1 hour and 5 minute. And you knew once we broke that, we were looking for a retest back into this area. Don't panic when price pushes away, because it didn't go from external to internal. It needs to do that before price can run. So when price runs away here and people panic, they start trying to get into trades here. This isn't the area to be taking a trade from. We know if we pull price out like this, we need to be coming back into the premium. So price is perfectly aligned into a premium, and it respects it and pushes away extremely fast at the end of London. That's what you want to see. That right there is perfect premium and discount alongside a market maker sell model. Take a trade and get a perfect easy win. And like I said, if we just turn this off now, we've got the London high of the day here, Asia sweep. We knew we had this London low down here to take as well, which was created once we took that push back up, pushed right down, nice and easy. Perfect trade. And yeah, that's a perfect entry, perfect market maker sell model.